Welcome to Spidell's California Minute. I'm your host, Catherine Zidane, and this week we're covering the upcoming June 15th deadline to make the first of two pass-through entity elective tax payments. We'll be covering this issue in greater detail in our upcoming 2022 post-tax season update and review webinars, which start on May 10th. You can choose from various dates and choose between morning or afternoon sessions, plus see a full list of topics covered at caltax.com under the Webinars tab. Under AB 150 for taxable years 2021 through 2025, a qualified S corporation, partnership, or LLC taxed as a partnership or S corporation can make an election to pay a pass-through entity elective tax equal to 9.3% of its qualified net income. This tax is deductible on the federal entity return and decreases the federal net income included on the owner's K-1. California also allows the entity's consenting individual, estate, trust, and now certain single-member LLC owners to claim a credit on their California return of up to 100% of the tax paid on their behalf. For the 2021 taxable year, the tax was due by the due date of the original return without regard to extensions, which is March 15, 2022 for calendar year taxpayers. Payments can be made after that date with extended returns, but they're subject to late payment penalties. For the 2022 through 2025 taxable years, the entity will need to make two payments. The first payment is due by June 15th of the taxable year, and the amount due is the greater of 50% of the elective tax paid for the prior year, or $1,000. The remaining amount is due by the entity's original filing deadline, again March 15th for calendar year taxpayers. If the June prepayment is underpaid, then the taxpayer is ineligible to make the election for that taxable year. The June 15th payment deadline applies to both calendar and fiscal year taxpayers. Taxpayers that did not pay the tax in the prior year only need to pay a $1,000 prepayment. Taxpayers whose prior year return is on extension and hasn't been filed by June 15th of the current year need to estimate the prior year liability. To be safe, we recommend overestimating in these situations because underpayments will result in the election being disallowed for 2022, and taxpayers won't be able to get refunds of their estimated payments until the 2022 California entity return is filed. There are no exceptions to the 50% of prior year tax requirement for the June 15th payment. The pass-through entity elective tax is exactly 9.3%, but what if the tax is underpaid? If amounts paid by the original due date of the return are less than 9.3% of the entity's qualified net income calculated when the return is filed, the remainder will be due with the return and the entity will be subject to penalties and interest. If the tax is overpaid, the entity will be refunded the overpaid amount once it files its return, subject to any outstanding tax liabilities or offsets. If the payment is made by check, the check has to be sent with Form FTB 3893, Pass-Through Entity Elective Tax Payment Voucher. Taxpayers will use the 2021 payment voucher for all payments made for 2021 net income, even if those payments are made in 2022. Alternatively, entities can pay the tax through WebPay, in which case no Form 3893 is required. We've also been covering California's pass-through entity elective tax in great detail in Spidell's California Tax Letter. For details on this monthly tax news subscription, which includes access to the transcripts of this podcast, visit caltax.com and click on Publications. That's all for this week. Join us next time for another episode of Spidell's California Minute.